Imagine having 3 go-to strategies that 100% work to spot high-profit trades before anyone else. In this video, I'm revealing exactly that. 3 simple ways to consistently beat the market using LuxAlgo premium indicators. These strategies aren't just theory, they're proven methods to lock in massive profits, and I'll show you step-by-step how to make them work for you. If you're ready to take your trading to the next level, stay tuned because these setups can change your trading game immediately. Let's jump straight into the first strategy and see how you can start turning market moves into profit instantly. The first strategy includes 3 indicators. In order to add the first one, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium, so click that to your chart. The Signals and Overlays is an all-in-one toolkit made up of more than 20 plus features primarily focused on generating useful signals and overlays to fulfill any trader's technical analysis needs with relevant data. This Signals and Overlays indicator can be used alongside other forms of technical analysis. However, it was also designed to be used as a standalone toolkit that can fit any trading style. Now let's open the settings of the LuxAlgo Signals and Overlays indicator and adjust its settings. First, let's take a look at the basic settings. For the presets and filters, we want to use none. For the signal mode, we also want to use none, and we do not want to use the AI signal classifier, so make sure this option is disabled. We can leave the signal sensitivity by default as we are going to use the autopilot sensitivity. Next, for the candle coloring, we are going to use Confirmation Simple. For this strategy, we don't need any indicator overlay, so make sure all the overlay options are disabled. Within the advanced settings, we want to set the autopilot sensitivity to short term, and we are good to go. Now we want to add our second indicator to the chart. Let's click the Indicators tab again and search for LuxAlgo Oscillator Matrix. The Oscillator Matrix is a special tool that combines over 6 different parts to help us follow trends and spot when they might change. It's like having many tools in one that work together. We can use it in different ways. For instance, it can show when there's a lot of money coming into the market and also give strong signals that a trend might reverse. It can also give us immediate signals about upcoming trends by showing when there's not much money flowing into the market. Now that we understand the logic behind this indicator, we want to adjust its settings. So let's open the settings, click the style section and uncheck everything except for the hyperwave and the overbought and oversold level. To increase the visibility of the hyperwave, we can click the line option and make the line a little bit thicker just like this. Also, I prefer to use a red color for the overbought level and green for the oversold level. Finally, we want to add one more indicator, so let's click the Indicators tab once again and search for SMA and click the Simple Moving Average to our chart, which is located under the Technical section. We want to open the settings of the SMA, and for our length, we want to use 40. Under the Style section, we want to change the color to yellow, and we want to make the line thicker to increase its visibility. Now onto the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably, and let's first start with the rules to enter a long trade. For a long entry signal to be valid, there must be 3 conditions met. First, we need to identify an uptrend. We can identify the uptrend simply by using the candle coloring of the Signals and Overlays indicator and by using the SMA line. As we can see here, the candles are colored in green, which indicates that we are in an uptrend, and as the price action is located above the simple moving average line, we can consider it as an uptrend. Second, we need to see a valid pullback into the SMA line. For a pullback to be valid, the candles need to touch or close below the yellow line. Third, now we need to check the oscillator matrix. For the oscillator matrix to give us a valid long entry signal, we need to see the hyperwave crossing below the 20 level. As we can see here, the hyperwave crossed and closed below the 20 level, so all conditions for a valid long entry are met, and we can open a buy trade at the close of the candlestick. We put our stop loss below the last swing low, and we are going to exit the trade as soon as the hyperwave crosses and closes above the 80 level. Let me show you another example for a valid long entry signal. So let's check 3 easy steps. First, we need to see if the market is going up. Looking at the chart, if most candles are green colored and the price action is above the yellow line, it means the market is going up. Second, we look for a small drop in price where it touches or goes just below the yellow line. This is what we call a pullback. Third, we check our special tool, the oscillator matrix. We want to see the line called hyperwave go down and cross below the 20 level, which is this horizontal line right here. In our charts, it does this, so all our rules for a long entry are met. We put our stop loss, which is like a safety net, below the lowest point the price went recently. We close the trade and take profit when the hyperwave line goes up and crosses above the 80 level, which is this horizontal line right here. Let me show you an example for an invalid long entry signal. As we can see here, the price action is more in a sideways movement. We can identify this sideways movement by simply checking the candle coloring of the signals and overlays indicator. Also, if we draw some horizontal lines, we can see this is more a consolidation zone. So even if the oscillator matrix is giving us a long signal, we do not want to enter a long trade at this point. Let me show you another example for an invalid long entry signal. As we can see here, the hyperwave is very close to the 20 level, but it has never crossed and closed below it. Do not make the mistake to FOMO in here because it might result in a loss, even if the overall chart is uptrending. Let's move on to the rules to enter a short trade. For a short entry signal to be valid, there must be 3 conditions met. First, we need to identify a downtrend. This can be done using the candle coloring of the signals and overlays indicator and the SMA line. When the candles are red, it indicates a downtrend, especially if the price action is below the simple moving average line. Second, we need to see a valid pullback into the SMA line. A valid pullback happens when the candles touch or close above the yellow line. Third, we must check the oscillator matrix. For a valid short entry signal from the oscillator matrix, the hyperwave should cross above the 80 level. Once it crosses and closes above this level, all conditions for a valid short entry are met, and we can open a sell trade at the close of the candlestick. We put our stop loss above the last swing high and exit the trade as soon as the hyperwave crosses and closes below the 20 level. Let me show you another example for a valid short entry signal. We'll follow 3 simple steps. First, check if the market is going down. Red candles and prices below the yellow line indicate a downward trend. Second, look for a pullback where the price touches or crosses above the yellow line. This is essential. Third, use the oscillator matrix. We need the hyperwave to cross above the 80 level, which is marked by the red horizontal line. If this happens, it means all our rules for a good short trade are met. We set our stop loss above the recent highest price point. We close the trade and take profit when the hyperwave line goes down and crosses below the 20 level, marked by the green horizontal line. Let me show you an invalid short entry signal. We avoid entering a short trade just because the hyperwave enters the overbought zone. It's crucial to follow all 3 rules for profitability. For the last tip of our strategy, remember this: only take 3 to 5 trades in the same direction. This is important because markets often pause after a significant move in one direction, similar to how you need to catch your breath after running fast. This pause can lead to market corrections or sideways movement, increasing the unpredictability and risk in your trades. Limiting trades helps capitalize on strong moves and minimizes risk. Now that you've seen how powerful the first setup can be, let's take it up a notch with the second strategy. Let's start with a clean chart. This strategy works on several markets and time frames, and it can be used from 5 minutes to 4 hours or even the daily chart. But as an example for this video, we will use the GBP USD chart on the 4 hours time frame. The strategy includes one indicator only. In order to add it, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium, so click that to your chart. Now let's open the settings of the LuxAlgo Signals and Overlays indicator and adjust its settings. First, let's take a look at the basic settings. For the presets and filters, we want to use none. For the signal mode, we also want to use confirmation and exits. And we do not want to use the AI signal classifier, so make sure this option is disabled. For this strategy, we want to set the signal sensitivity to 21. Next, for coloring the candles, we'll use confirmation simple. For this strategy, it's important to use the Smart Trail indicator overlay. To do this, make sure you turn on the Smart Trail by checking this box. With the new update to version 6.2, we can now adjust how quickly the Smart Trail indicator responds. The higher the number you set, the longer it will track the trend. For our strategy, we're going to set the reactivity number to 4. Within the advanced settings, we want to make sure the autopilot sensitivity is set to off. And as we're setting up these powerful tools, remember that using my link in the description not only gives you access to the full capabilities of LuxAlgo, but also supports my channel. Plus, you'll get up to a 20% discount on these premium indicators. It's a win-win for both of us. Now, before we get into the trading rules, let's understand how this indicator and signals work. And let's start with this buy and sell signals. The confirmation signals help us decide when to buy or sell. They change based on recent market trends. These signals work best when we use them together with other trading tools. There are 2 kinds of confirmation signals: normal signals and strong signals. The normal buy and sell signals are these up and down triangles without a plus sign, and the strong signals are these up and down signals with a plus sign. The strong signals are matching the current market trend, showing it's a good time to follow the trend. The normal signals might show up during short-term market changes. As we want to be on the safe side, we are going to use only the strong buy and sell signals, which include the plus sign in it. For our strategy, we are going to use the candle coloring as well. The green candles represent strong bullish activity and the red candles represent strong bearish activity. The purple colored candles show us a normal activity, so for our strategy we are going to use only the green and red candles to enter the trades. The smart trail is a trailing stop that moves away from the price if there are sudden changes in a trend. When the price is higher than this stop, it shows an uptrend, and when the price is lower, it indicates a downtrend. The smart trail also shows support areas in blue and resistance areas in red. It helps to guess when the price might change direction as it enters these areas. This helps you make better decisions on when to enter a trade. Now onto the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably, and let's first start with the rules to enter a long trade. For a long entry signal to be valid, there must be 3 conditions met. First, we need to see the smart trail being colored in blue. Second, the indicator needs to print a strong buy signal, which is this green triangle up with a plus sign. Third, the candle must be colored in green. If all the conditions match, we can start a long trade. We place our stop loss just below the strong buy signal. Now, pay attention, for this strategy, we're going to set 2 targets to take profit. Our first target is at the first exit signal, which is this small blue X right here. When the X signal appears, we'll close half of our position and move our stop loss to the break-even point. Then we wait for the second X signal. As you can see, our second exit signal has appeared, so we'll close the rest our position just right here. Let me show you another example for a valid long entry signal. So let's check 3 easy steps. Blue colored smart trail, strong buy signal, green colored candle. Stop loss below the strong buy signal. For our first take profit, we are targeting the first exit signal, which is this blue little X right here. As soon as the X signal is getting printed, we want to close half of our position and set the stop loss to break even. Next, we want to wait for the second X signal to be printed. Now we want to close the rest of our position as we got our second exit signal being printed. Let me show you an example for an invalid long entry signal. As we can see here, the smart trail indicator is colored in blue, and we got a buy signal being printed, but it's not confirmed by a green candle. Instead, the candle is purple colored, so this entry signal is invalid. Let me show you another example for an invalid long entry signal. Here we can see a buy signal, but the smart trail indicator is red colored, which means we do not want to enter a long trade at this point. Now let's talk about the rules for entering a short trade. For a short entry signal to be valid, there must be 3 conditions met. First, we need to see the smart trail being colored in red. Second, the indicator needs to print a strong sell signal, which is this red triangle down with a plus sign. Third, the candle must be colored in red. If everything lines up, we can go for a short trade. We'll place our stop loss just above the strong sell signal. Just like with long trades, we're going to have 2 targets for taking profit. Our first target is at the first exit signal, which is this little orange X right here. When this X signal shows up, we'll close half of our position and adjust our stop loss to the break-even point. Next, we wait for the second X signal to show. Remember, a great strategy needs great tools. LuxAlgo premium indicators are a game changer. Using my link in the description gets you up to a 20% discount. Let me show you another example for a valid short entry signal. So let's check 3 easy steps. Red colored smart trail, strong sell signal, red colored candle. We set the stop loss a few ticks above the strong sell signal. For our first take profit, we are targeting the first exit signal. As soon as the orange X signal is getting printed, we want to close half of our position and set the stop loss to break even. As soon as we got our second exit signal being printed, we want to close the remaining part of our position. Let me show you an example for an invalid short entry signal. As we can see here, the smart trail indicator is colored in red, and we got a sell signal being printed, but it's not confirmed by a red candle. Instead, the candle is purple colored, so this entry signal is invalid. Let me give you another example of a signal that's not right for a short entry. Here, you can see a sell signal, but the smart trail indicator is colored blue. This means we shouldn't start a short trade now. It's important to stick to all 3 entry rules to stay safe.
With 2 solid strategies in your toolkit, it's time to reveal the third and final setup. This one's a game changer for maximizing profit potential and catching market moves others miss.
This strategy includes 1 indicator only. In order to add it, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium. Now let's click the settings of the Signals and Overlays indicator. Go to Presets Filters and enable the Trend Strength filter. Set the signal sensitivity to the actual optimal sensitivity. You will find the recommended value in the dashboard, which is this one at the right bottom corner. Or, alternatively, you can use the autopilot sensitivity, which will adjust the signals dynamically. Set the signal mode and the candle coloring both to confirmation, and make sure to enable the smart trail indicator overlay. Now, before we get into the exact rules for entering long and short trades and to understand when to take profits, let me first give you an oversight of how the signals and overlays indicator work. And let's first start with the candle coloring, which is set to confirmation simple for our trading strategy. So the candle coloring is very simple to understand. If the candles are green colored, it indicates a strong bullish activity, and if the candles are colored in red, it indicates a strong bearish activity. Purple colored candles, on the other hand, indicate a normal bullish or normal bearish activity. For beginner traders or those who are not advanced LuxAlgo users, I would recommend to use only the green and red candles for trade entry confirmations. By the way, in order to use the candle coloring as properly as possible, make sure to disable the borders in your chart settings. Next, for our strategy, we are using the signal mode set to confirmation and exits, which gives us these up and down arrows on the chart, as well as these blue and orange colored X signals. The up and down arrows are going to act as our buy and sell entry signals. Those with a plus sign in it are strong buy and sell entry signals. These strong signals are signals that are in accordance with the current estimated trend, while normal signals can be caused by a retracement. For those just starting out or not yet deeply familiar with LuxAlgo, leaning towards the strong signals for trade entries would be a wise move. And finally, for the third part of our strategy, let's take a look at the smart trail indicator. You can think of it as a colored cloud that is getting printed below or above the price, stepping back when the market gets a bit too jittery. This helps us to stay aligned with the trend, avoiding the distraction of minor price fluctuations. When the price action is located above this blue cloud, it signals an uptrend, indicating the market is on the rise. Conversely, when the price dips below the red cloud, it marks a downtrend, showing the market is on a decline. The smart trail highlights support in blue and resistance in red. These colors act as guideposts, pointing out possible turning points where the price might reverse its course. It's like having a guide that not only shows the direction but also alerts us to upcoming challenges, helping us make better decisions about when to enter or exit trades. By keeping an eye on these color cues, even beginners or those not fully versed in LuxAlgo can find valuable insights for their trading decisions. Now onto the fun stuff, the exact rules for entering trades, and let's start with the rules to enter a long position. Make sure to pay close attention to every single one of them. So for a valid long entry signal, there must be two conditions met. First, the price needs to pull back, and we need to see a bounce off the blue smart trail indicator. Next, we must wait for a confirmation signal, which is represented by this green upward arrow. If these two conditions align, we're clear to initiate a long trade. Our strategy for booking profit is straightforward. We exit the trade either when a sell signal appears or when an exit signal is given. This method ensures that we lock in gains promptly, optimizing our trading outcomes. Let me walk you through another simple example of when to jump into a long trade. Here we see the price drop a bit and then bounce back up from the blue smart trail indicator. A little while later, a green arrow shows up, telling us it's a good time to go long. And we exit the trade either when a sell signal appears or when an exit signal is given. Now let's go over how to know when to make a short trade. To do this right, we need to check off two things. First, the price should go up a bit, then hit the red smart trail indicator and drop again. Second, we look for a red arrow pointing down. If both these signs show up, we're good to go for a short trade. We'll plan to take our profits either when we see a signal to buy or when we see an orange X appear, telling us it's time to exit. Let me walk you through another example of a short entry signal. We notice the price action pulls back and is rejected by the red smart trail indicator. Not long after, a sell confirmation signal appears, so we can confidently enter a short trade. We keep the trade open until a buy signal shows up or an orange exit signal appears. At that point, we exit our trade.
If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.